Good afternoon and welcome to Markets Today. I'm your host, Mbithe Mwema. A very interesting day on the Nairobi Securities Exchange. We have a lot lined up for you. Firstly, we're giving you an overview of corporate news and what is moving the markets. We'll also give you an overview of what's happening in the foreign exchange markets. There has been a bit of strengthening of the Kenyan currency vis-a-vis the US dollar. We'll be giving you highlights with regards to what is driving this and what is happening there. Over and above that, the conversation on the Nairobi Securities Exchange continues to be dominated by the rate cap repeal that was actually passed by Parliament earlier this week on Tuesday. Earlier today, this morning, the President, His Excellency Mr. Uhuru Kenyatta, did sign the bill into law. And this law now actually articulates the fact that any new loans that have been issued in this country will be issued in a no rate cap environment. Existing loans remain under the rate cap environment unless they're priced lower. So today what we have seen is KCB actually come out yesterday and say they are in support of this current bill, which is now a law in Kenya, and they do expect maybe to price the SMEs at maybe 2 to 3 percentage points above where they were at with regards to the the rate cap when it was in existence. In other words, I think we should see the SMEs start off accessing credit at anything between 17 to 19% on the higher side. That said, what is happening on the stock exchange? Yesterday, we did see a lot of excitement on the back of this bill being passed in Parliament. Turnover was up 323% on a day-to-day basis, trading 3.2 billion shares over the day. Foreigners were net sellers of Safaricom and Equity Group. Safaricom was a top traded share at 40 million shares that were traded over the day. This was followed by Equity Bank at 15 million shares traded over the day. Now, the excitement over the banks was slightly muted with regards to price movements, and we saw that banks trade anything between 4 to 5%. And not any, I mean, this is slightly slower than what we had seen last week when they were topping 10% on an intraday basis at the instance when the rate it was apparent that the rate cap would be repealed in totality. That said, today it remains a very muted day, nothing much happening. We continue to see a bit of profit taking, largely by the foreigners on the stock exchange. Now, let's move over to the foreign currency. We have seen it strengthen a little bit, and it's now trading at the 102.8, 102.9 level. What has been driving this strengthening? Largely over the last 2 weeks, it's been capital inflows into the Nairobi Stock Exchange with the reversal of the rate cap decision. We have seen a lot of interest with regards to the banks. KCB, a lot of demand coming through for cooperative. Equity Bank has been a mixed bag. Largely, I mean, it's sort of been foreign sellers as well as foreign buyers. But for KCB and Cooperative Bank, we have seen new net inflows coming in from the foreign investors. These foreign flows in dollars have actually worked to strengthen the Kenyan currency. We're trading at about 102.8, 102.9, and looks like we could be trading within this range over the next couple of days. That said, we have paid a lot of attention to the banks and the upside. Looks like the upside is tapering off, and we expect the banks at least to trade between 43 to 50 on the higher side being KCB at about 50 if it goes on the higher side, and equity maybe 43 to the 45 shilling range. Is there any more value left on the table? But more importantly, what is investor sentiment when we are looking at the other counters and the other sectors? We have had some of the sentiments shared on this show with regards to elements of Safaricom and potential risk affiliated with Safaricom, largely on its Fuliza, and regulatory risk associated with its M-Pesa operations. Could this be the beginning of new regulatory risks in this particular sector? We've also had on this same segment some of our fund managers telling us that look out for some stocks such as Bamburi Cement. In other words, expect to start seeing credit flowing into the manufacturing sector, an industry that actually had demand for credit but was not able to access it because it was priced out of the market at the 13 percentage point when the rate cap was in process. Now, the question is, over and above the banks and looking at the telecom sectors, are there other gainers? Are there other losers? Where else could you be able to make a bit of money if you want to invest on the Nairobi Securities Exchange? And is it the end of this run that we are seeing on the banks, or is there some more value that should be left? That said, in general, liquidity is certainly much better than having tight liquidity in the market. The fact that we expect access to credit is already a huge positive for the economy. We are joined by Rolly Kemole, who's a senior analyst at Nabo Capital. He will be discussing with us after the break, what do we expect to see? What are investors doing, local and both local and foreign? And what other sectors should we be focusing on when we're trying to create an investment case for the Nairobi Securities Exchange? And more importantly, 3.2 billion. Is this a number that will stay with us with regards to the turnover on the NSE from here on, maybe for another 2 months, 3 months, 6 months? When does it end? And what do we expect to see? And over and above that, he looks at the sub-Saharan African market. We want to get his views on what are the sentiments comparing Kenya and Nigeria, which tends to be a comparative basis for any investors who are looking at this economy, as well as understanding there are big IPOs that are happening there. Aramco has its IPO that's slated for later in this month. Will we expect to see outflows of funds from the Kenyan market or inflows of funds, or is it neutral for this particular IPO? We take a short break to look at the daily commodities, and always remember we are streaming live on our Facebook page, our YouTube page, as well as our Twitter page. Engage with us and we will see you shortly after the break.